Hi, and welcome to the next episode of Accounting with Guerrilla Accounting. We've got with us today Dan Fellows and Richard Hepburn. So just going to go through the accounting. We've done a few of these events in the past where we go through the accounting, and we usually do them live. Today we're doing something slightly different. We're having it pre-recorded, but we've got a whole set of questions that people have asked, both us and the guys at Guerrilla. So we want to go through those questions. If you've got any questions outside of those, you can reach out to Guerrilla. We'll leave a number on the link, and you can just reach out to them, ask them any questions you like, and go through any of the stuff that we go through today as well in more detail. So just going to start off with Dan. Just tell us a bit more about yourself and what we're going to talk about today.
Great. Well, hello, everybody. Thanks for that, Tweedle. My name's Dan Fellows. I'm one of the directors at Guerrilla Accounting, and I've got my colleague Richard Hepburn here with me, who's our head of operations and our most senior accountant. Just a very quick overview on us and why we're going to talk, why we're qualified to speak to you guys as locums. We are a national accountancy firm. We've got just over 4,000 clients all over the UK, and we specialise purely in self-employed clients. So all of our clients are either locums like yourself, whether that's pharmacists, doctors, vets, etc. They're all self-employed. So we're very familiar with the type of things that affect you, and we live and breathe, any changes that come forward from budgets or legislative changes, regulatory changes, etc., that go right to the heart of your tax compliance and working practices. So obviously there's a lot going on at the moment. We've just had a spring budget, which we're going to talk to you about today. We've got a new tax year approaching us in just under 2 weeks now, and there's quite a few changes taking effect from the 1st of April, and then there's some more changes later on in the year as well. So we'd like to just talk to you briefly about what those changes mean for you. We'll be straight to the point, and some no-nonsense advice. We're not going to sit here and play armchair economics and hypothesize about things like inflation, etc., and interest rates. We'll just get to the nitty-gritty stuff in terms of how this is realistically going to affect you and your finances on a day-to-day basis. Richard, I don't know if you want to introduce yourself briefly, and then we'll get straight to the questions.
Yeah, hi, my name's Richard. I'm head of operations, as Dan said. I look after the accountancy side of the business. So, any changes to tax legislation, accounting, really anything that would affect locums, I'm involved with at Guerrilla. So, yeah, hopefully I can answer the questions that we've got and provide a bit of an insight into what's happening over the next year, and provide a bit of advice on that.
Great. So I've got about 5 questions that I want to go through. Some of these are very common questions that people ask us, and obviously I think you guys have had these questions in the past before. So to start off with, can you tell us a bit more about the announcement from the spring budget and how that's relevant to the locums?
Yeah. So with the spring budget, there wasn't too much updates on tax, but there has been a lot of things announced in the prior year. But we'll start with the budget first of all. There were a few bits on things like, the country missing a recession and inflation. But the two main things that stand out for I suppose, workers, and from a tax point of view, the one was the childcare. So there's going to be potentially up to 30 hours childcare per week for anyone with children provided by the government. That announcement, actually, when we read into the details, it's only going to come in from 2024. So, something that might help a lot of workers get more people back into the workforce as well. Those stay-at-home parents where the actual cost of childcare is, makes it not really worth getting back into the workplace. But that's, I suppose, a welcome sort of change for many. And the other one was the pension reforms. So there's an annual exempt amount, so where you wouldn't pay any tax, which is £40,000, and that's increasing to £60,000. And the annual limit has been scrapped. So I suppose most people aren't lucky enough to, be having that much in the pension pot, which is over £1 million. But there is, there's a bit of a situation where some higher earners have reached the maximum they can get in the pension and decided, it's going to cost them, from a cost point of view, they're better off retiring rather than actually continuing working and having their income taxed, and then the money they put in the pension taxed as well. So there are some things to think about, and I'll come to that a bit later on. We'll talk about other changes, but they're the two main ones, and the pension one can come into play when you're looking at your taxable position, because the corporation tax rates are changing next year. So that's probably one to discuss when we move on a bit further along.
Yeah, no, that's great. Thank you. Thanks for the next question that we get quite commonly is, are there any tax changes to be thinking about right now?
Yeah, and as Dan said earlier, there's quite a few things coming up with the new tax year. There are some tax changes that have already been announced that come into effect from the start of April. I think the big one, and again, I know that as locums, a lot of your guys are set up either as limited company or sole traders. And from a limited company point of view, there's a change to corporation tax. So the main rate is moving from 19% to 25%, which is quite a significant jump.
Big jump, yeah.
However, that's not going to affect everyone. So there is a small companies rate, which is set at 19%, so still the current rate for anyone with profits up to £50,000. Now, the reason I mentioned before about things like pension contributions, it might be, if you're going to go over the £50,000 profit, your corporation tax rate is going to jump up. It's actually 26.5% when it gets over 50 for the bit between 50,000 and 250,000. So if you're as a business owner, if you're looking to keep your profits to the lower rate, you can do things like make pension contributions, which is where the new amounts to the pension changes might kick in. So there's a bit of a tax planning to do around that when expenses are sort of come into the company, like pension contributions that you have some control over. You might want to think about when you do those, and it's probably good to have a discussion with your accountant about a bit of tax planning advice on that, and the best way of going about it to save some tax. The other main one, again, for the limited company guys, is the tax-free dividend allowance is moving from £2,000 to £1,000. So just as a tip, as we're coming to this end of tax year, again, from a tax planning point of view, have you taken your tax-free dividend? Is there any dividends you can take in the basic rate allowance before you're paying higher rate tax? So, it's all about planning when, how you pay yourself in the company. Are you getting the most out of the salary and dividend combination? And I'd say having that conversation with your accountant to make sure you're on the right track.
Okay, yeah, that makes sense. So on to the next question: is it better to operate as a limited company or a sole trader?
Yeah, that's a great question, because we see this a lot, and the answer is it's not always the same. However, it does tend to be the limited company which is the better option generally. It all depends on your income. With the limited company option, there are more responsibilities. You're required to file accounts. The director is responsible for that, and corporation tax return, as well as your self-assessment. And I would say you probably you do need an accountant to assist with that. So there's the extra cost.
Yeah, it's just worth pointing out that minorly, because it tends to affect bigger businesses, but there are some changes on the horizon with regard to statutory filings on limited company directors, and there will be additional KYC requirements around becoming a director and a shareholder, etc. So again, it just feeds into Richard's point before, that there is a bigger admin burden if you are operating as a limited company. However, that's still, it's still the financial and tax benefits still massively outweigh that additional admin burden.
Yeah, I think one of the things we probably get asked quite a lot as well is, at what point is it better to go from a sole trader to a limited company account?
Yeah. It's not always a one size fits all, but what I would say is if you're doing some locum work, just a little bit on the side, maybe doing the odd shift here and there, picking as a bit of a sideline, it's probably better to stick as a sole trader. Like I said, like Dan said, there's more burden with the limited company, and the amount of income that you're going to get, the tax difference isn't going to make as much difference. However, if you're going operating as a locum as your sort of main career or main source of income, then the limited company is usually the best route. And there are other things, you're more flexible with a limited company and how you pay yourself. And when you release the income from the company, you can sort of have a spouse as a shareholder as well, and you can make use of their allowances. So it does work out a lot better. But then it's like the weighing up like we said before, paying the additional costs such as an accountant. You probably would be better having an accountant even as a sole trader, unless you're happy doing your filings yourself. But the accountant can also provide advice on things like expenses and the best way of operating, which the benefits from that can often outweigh the costs of the actual accountancy fees themselves.
Richard, you mentioned about the allowances there. Do you want to just elaborate on that for the listeners?
Yeah.
In terms of what they are, how they work, etc.
Yeah. So so everyone has sort of like tax allowances each year. Starting with the personal allowance. So that's a tax-free amount at 12,570. On top of that, you get a tax-free dividend amount at which is £2,000 currently, and then up to the next sort of threshold, which is 50,270, your dividends are taxed at 8.75% versus 20% as an employee sole trader. So the tax, the tax is lower. Now, if you have two people as shareholders of the company or working through the company, obviously if you're looking at yourselves as a married household, then those allowances can be utilised, and you can end up paying less tax than if all the income would be attributable to one person, which as a sole trader it always is. It's just going to come to you yourself, and all that income is going to be taxed in that particular tax year. So you could have a situation where you have a really good year, earn a lot of money, and you're paying high rate tax, which is good news at the end of the day because you're doing well. But you may have a quiet year next year, and you not end up using up all your lower rates allowances. Whereas with a limited company, the company receives the income and it's paid out from your company, as dividends whenever you feel like it, or you're a bit more flexible with how that works. So that's another big benefit with the limited company.
Okay. I think that covers most of that question there. I think the next one is, what can I be thinking about to save tax over the next year? Sorry, you're on mute.
Apologies. Yeah. We did cover a few bits earlier about the sort of tax efficient way of operating and paying yourself and things like that. But there are other things to think about. Just a little bit of spit. The main one is expenses. And this is something we try and discuss with our clients because it's one of those things. It's a bit difficult to retrospectively go back, and one of the things we always advise is it's good to have a relationship with your accountant and have these chats so you know what you can be claiming for. Obviously, there's things like insurances, subscriptions, that kind of stuff. But if you're working as a locum and going to different sites, there's the travel costs that you can claim for, mileage. So keeping a record of that, which you should be doing as you're going along, any equipment that you need. And there are other little bits and pieces. So if you do any work from home, even if it's your admin stuff, when you go back, sending information to your accountant, there's a working from home allowance, which is £312 a year. Something called trivial benefits, which are gifts to employees, which is up to £300 a year, which you can buy things like vouchers to give to yourself as an employee. Things like annual events, which you may be, see yourself as the only employee. However, you can still claim for things like that. So even if it's just taking your spouse or partner out for a meal at Christmas time, say, or That's classed as a work event, and you can claim for those costs too.
What about the CPD training stuff? So obviously, a lot of the pharmacists are now going to be going to do independent prescribing, and with that, there's a lot of requirements to upskill and do a lot more training. And some of these cost quite a lot of money. Would they be able to claim that money back?
Yes, yeah. So as long as it relates to your profession, the trade that you do, we have similar ones as accountants. We need to keep up to date with tax, so we've got to do a certain amount of CPD. We've got our professional subscription memberships that need paying for as well, similar to guys in your profession. So yeah, all that can be paid for as long as it relates to your trade. So as a locum, that's fine.
Richard, can you just elaborate, because I'm conscious that some of the listeners might be DIY accountants doing their own books themselves. When people say, can I claim it back through the company, my expenses, my travel, etc., just can you just touch briefly on how it actually works in terms of the process and the admin involved, etc.? Because a lot of people, especially like I say, the DIY accountants are not it's not clear.
Yeah, sure. So with the claiming back at costs, it's I suppose to look at it, if you can either pay for the business costs straight away from your business, or if you've paid for them personally, which a lot of these costs would relate, you would have paid personally, then you can your business can repay that to you. There's no tax charge on that, like paying a salary. It's basically saying, well, actually, you've suffered the cost of an allowable cost that your business can pay for, and that's going to be expense to the business and paid back to you. It's a little bit like, sending in an expense claim form if you've got an employer. Same with mileage. Keep a record of the mileage, and that's multiplied by 45 pence per mile up to 10,000 miles, and your business can cover that, and it's tax deductible for your business. So that's the other main benefit. So your business, it's a business cost. It's reducing your taxable profit, so you're going to pay less tax on that as well. So if you think of it this way, if you've paid that cost yourself and it's never been claimed as an expense to your business, you've paid for it from your post-tax earnings. So the income that your company's paid to you. Essentially, if it's dividends, your company's paid tax on that, and then you've paid your personal tax on that, and then you've paid for that cost. So the more within the rules, of course, within HMRC's rules, the more that your business can pay for, the lower your tax bill is, and essentially the more take-home pay you've got.
And Richard, just briefly, whilst you touch on take-home pay, and we're talking about optimising the tax that you pay, the income that you take home. Typical scenario: if I'm a locum pharmacist and I'm billing or earning 50,000 a year, I've just set up my limited company. Typically, what's the most? I mean, obviously each person's different and it's all sensitive to circumstances. But typically, what's the optimum way of structuring my affairs to make sure that I'm as tax efficient as possible?
So firstly, it's look at the salary, and I'm sure you've all heard about things like IR35. That's a big thing. So if you're outside IR35, great news. But what that does mean is you can pay yourself whatever salary you like. So even minimum wage legislation doesn't come into it for directors. They don't have to pay themselves a salary if they don't want to. But there is a sort of optimum level you want to be looking at, which for years has been set at the NI threshold. And just to explain that, you pay yourself a salary at the NI threshold, and that should fall within your personal allowance. There's no threshold. It's 11,908, and it changes each year. So at that point, there's no income tax on there, and also there's no national insurance on that. What you need to remember from you've got your limited company and yourself personally. Once you pass the thresholds, there's a threshold where your company pays employers national insurance, which is 13.8%. So, and then you on your payslip will be paying employees national insurance at 12%. So, that's at that point, your company's better off paying dividends, because the dividend tax rate, as we said, it's a lot lower, and there's less tax to pay with the combination of paying corporation tax and the dividend tax rate.
Just for the record, if anybody wants to have a go on a free calculator, we have one right on our homepage, on our website, gorillaaccounting.com. It's free to use. You can tap in your details and it'll give you a confidential take-home pay calculation. I mean, there's plenty of these available on the internet. If you're curious as to how better your take-home pay could potentially be, then feel free to have a go on that.
Yeah, I think those are really useful. And sometimes I used to use them when applying for a job years ago, and I always found that quite interesting. For anyone who's newly qualified as well, or anyone who's looking to go into employed position or be it locuming full time, there's a lot of people now switching back into locuming full time as well. So it's a good way to check your figures, and it's free as well. So on to the next question. Do I need to be thinking about the MTD, making tax digital, and what does that even mean?
Right, so with MTD, so that's something you've probably all heard about. It's actually been delayed now till 2026, but it is going to affect the self-employed and landlords. So yeah, the answer to that is be ready for it. One of the main things is you need to have a compliance software to do the quarterly filings.
Sorry to interrupt, Richard. Just so it's clear, MTD stands for Making Tax Digital. Just in case people have heard it under that instead of the abbreviated name.
Yeah, and I think with that, our sort of view has always been to work digitally anyway. So we've always made sure that we're compliant from that side of things, and not only for that, because we think it's the best way to work. Talk about things like expenses and tracking your income and your tax and things like that. Using a digital software where your business bank account links up, your expenses are on there, you can invoice your clients on there, having all that in one place. And the other thing is your accountant can interact with you. So we can jump on a call, look at your accounting data, have a chat with you about where you stand, your taxes, but also do these make tax digital filings. And just to be clear, anyone that's VAT registered, this is already in place, so you should be doing the MTD filings as we are.
Yeah. And I think lastly, this is one of the questions I get quite a lot, is around using umbrella companies. Is it more tax beneficial to use an umbrella company or go be a sole trader or limited company?
So you got to pay more tax if you use an umbrella company. All the deductions are coming out of. So basically, what happens is there's your work that you maybe your day rate is paid straight over to the umbrella company, like your other employee, and then employers and I stripped out plus all your employment taxes and the fee for processing that. Now, I think the thing with the umbrella companies is. Sometimes you push that way because it's seen as a safe way of avoiding IR35 because all the employment tax are being paid. So if you get the option to sort of work and pay yourself through your company, because you're a genuine business and you're working outside IR35, then it's by far the more tax efficient way than using an umbrella company. If anyone is advertising umbrella companies where they say you've got high take-home pay, I'd certainly advise avoiding those because we're starting to see some of these tax avoidance schemes popping up through umbrella companies now. So where there's deductions on the pay slip for things like loans and trusts and things like that. So yeah, be very, very wary and make sure that you're using, a good umbrella company that's paying the right tax. And we've heard other stories about things like holiday pay being deducted and not being paid out to employees and things like that. So yeah, do your research. But for us, if you can operate your own business and and you can work through yourself either as a sole trader or a limited company, then I'd stay away from the umbrella companies because you're going to pay more tax.
Okay. And I think that covers all the questions that we've had for this session. We're going to try and keep a lot of these accounting sessions quite short, so you could go through a lot of the questions, but also we want to do more frequently over the next coming months. So if you've got any more questions, you can get in touch with me directly, or obviously we'll have Gorilla Accounting's contact number on the video as well. So you can, I'll actually put on the video itself, so you can contact them directly. Dan, Richard, thanks for coming on today, and thanks for your time as usual. And I'll see you guys in the next one. Bye.